I need to share a story with you about how this podcast episode came to be. Imagine me sitting in the front row at the Barron's Team Summit this past March, frantically taking notes while Jessica Malkin walked through Cresset's digital marketing results. And then she casually mentioned that ChatGPT had just brought them a $500 million prospect. My pen froze mid-sentence. Because here's what I've observed after 2 decades in this business. Digital marketing in wealth management is genuinely hard. It requires sustained investment, a tolerance for experimentation, and the patience to iterate through what doesn't work before you find what does. Most firms test it, don't see immediate or near-term returns, and make the decision to just revert back to what's always worked, the relationships and referrals that built their business in the first place. But Cresset, they went all in. And by this past quarter, nearly 50% of their leads were coming from AI engines, not Google, not referrals, AI engines that most firms haven't even started to tackle. That statistic alone would make for a compelling episode, but it's just one data point in a much bigger story. Growth Leaders Podcast tells the stories of advisory firm founders driving differentiated growth. And Cresset's growth is remarkable, not just because they're leading with digital marketing or their employee ownership structure or their focus on serving CEO founders. It's because of how they've woven these elements together with genuine intentionality and a willingness to test and learn. They started in 2017 with 2 frustrated wealth management clients, Becker and Abby Stein, who couldn't find what they needed, so they built it themselves. Before they moved a single dollar onto their platform, they spent 3 days defining their culture. They chose a trademark name instead of naming it after the founders. They gave every employee equity from day one. And then they brought on Jessica Malkin, a serial entrepreneur who'd built Chicago Ideas into a nationally recognized platform. Someone who understood that growth isn't about following a playbook, it's about having the courage to test, pivot, and test again. 8 years later, they're at $65 billion in assets. They've brought in $4.5 billion through digital marketing alone since 2020. They operate with a diversified growth strategy, a third from M&A, a third from advisor liftouts, and a third organic, that compounds in ways single channel approaches simply can't. Today, you'll hear from Becker, founder and co-chairman of Cresset, and Jessica Malkin, executive managing director and chief growth officer. You'll hear about the pivots that didn't work and the ones that transformed the business. You'll hear about Cresset Catalyst, their pre-liquidity program that serves the advisors turned away CEOs who aren't yet at traditional minimums. And you'll hear how they're thinking about generative search optimization while most firms are still trying to master SEO. What I want you to listen to is not just the tactics, though the tactics are instructive, but the underlying philosophy. This is a firm built by entrepreneurs for entrepreneurs with a genuine 100-year vision. That changes how you make decisions. It changes what you're willing to risk, and it changes what becomes possible. Let's dive in. Okay, before we get started, I need to tell you how this interview came together because it's about what Cresset is doing right now. So I want to start just by giving our listeners some context for how we got here. Jessica, I saw you speak at the Barron's Teams Summit this year, 2025, March of 2025, and I've been following Cresset since you started. I've worked in this industry my whole career, and I kind of fangirl over firms that do really cool branding and marketing, and so I pegged you early on, and I've followed you for a while. You don't know this, or I don't think that you do, but I tried to get you on season 1 of Growth Leaders of Wealth Management. I just sent you a cold email that probably landed in your junk. I'll give you the benefit of the doubt. So when I saw Jessica on stage at Barron's, and Jessica, you were talking about your Cresset's digital marketing capabilities and results. And you also shared a story about how recently with ChatGPT, you got an inbound prospective client that's like a $500 million prospect. And I was furiously taking notes when I was sitting there. And then I was that person at the end that was like creepily standing behind you, waiting for you to get your microphone off. And then I was like, hi, I'm Meg. I have a podcast. I'd love for you to be on it. That's how we got here. 0 to 65 billion in 8 years. On the surface, that's an impressive growth story. But here's what makes it different. 4.5 billion of that came through digital marketing since 2020, in an industry where most firms are still debating if digital is worth the investment. They've built a recognizable consumer brand in a space dominated by founder names, and they've done it while maintaining a clear cultural identity that attracts both clients and top talent. What I wanted to understand is how, not just the tactics, but the foundational decisions that made this kind of growth possible, because those decisions started before they had a single client.
The origin of Cresset is really authentic and original. Cresset was started by clients, Avi Stein and myself, for clients, but initially for our own families. We both had these entrepreneurial lives of starting and building businesses. And then by coincidence, we each had also started our own private equity firms as well. So we'd had these independent careers. We were just friends. We had never actually done business together. We then started as two semi-retired friends investing together from our own family offices. And one day we were talking about our experiences in wealth management and family office. And we were both really frustrated. I'd been a 25-year client of one of the big Wall Street famous firms, Avi as well, a different Wall Street firm. And we just talked about what that experience had been and how much better it could have been, how much more value could have been added in our lives, and just what was missing. And then on the family office side, we each had our own family offices, again, by coincidence and independently. And we talked about the frustrations associated with that. In my case, I thought I had a secret as an entrepreneur, and that was that I was always highly focused on building businesses, and I was focused on the employees, the customers, and any investors I might have had. Then I was focused on family, because that is so important to me and hopefully everyone. And then after that, I cared about community. And was there any time after that for managing a family office, doing deep planning, all the things that we now really make sure that our clients do? Well, it turns out that that secret that I had is actually a universal challenge for all CEO founders, all high performers, all professionals that are really great at something. They're great at it because of their ability to focus on that thing. And a funny anecdote, by the way, I have had now somewhere between, Jessica will correct me, 200 and 300 probably founders calls where I've individually spoken to a prospect, a CEO founder. And at some point in the conversation, I might have said to someone about how I had this drawer and I would just put statements that came, bank statements, investment statements, I just shove them in this drawer. What I've learned is everybody has that drawer. It's really funny now. I'll say, if you don't have that drawer, they'll be like, yeah, I have that drawer too. This black hole. So with that frustration that Avi and I both had experienced, we were talking about there has to be something better. There must be a platform out there that has been created that is oriented around CEO founders, and maybe not even just at the age that Avi and I were at the time, but maybe even a platform that was oriented around CEO founders and C-suite executives and families and entrepreneurs, but also through the different seasons of life. Like, where were they in my late 20s and 30s, 40s, 50s, 60s? So we spent a year doing research, literally trying to find a firm that we could become a client of. And we just didn't find it. Now, subsequently, I have learned that there were some firms that were out there that would have been great. I just didn't find them. We didn't meet them. Maybe it was because of a lack of digital marketing back then. So with that deep entrepreneurial background that we have, Avi and I started Cresset from scratch with a very small team initially. And we launched the business with a vision of everything that we wanted for our own families. So that meant that we, of course, wanted highly capable wealth management, all the traditional services that we all know about. But we also wanted all the other things that are so important to having a great life. And so that meant family office services with consolidated reporting of not just what I had with the wealth manager, but what we had everywhere, and tax services and all important education and governance to help us with our kids in talking about money and planning off that. So we wanted the whole thing. The way we described it back then is we wanted a fractionalized single family office at scale, enterprise class. Think of some of the great names in North America of great families that have known large single family offices. We wanted to fractionalize that so that families like ours, and hopefully many others as we figured out how to scale it, could have access to that same incredible suite of services, so that when we're at our best, we're powering and empowering our clients to lead better lives, that they're running better businesses, they're better with their families, they're better in the community, they're better philanthropists, and we help power that and enable that to happen.
There's a structural advantage that comes from being founded by former clients. You know exactly where the gaps are. You've lived the frustration. You don't have to guess at what matters. But understanding the problem doesn't guarantee you'll build the solution correctly. Plenty of frustrated clients have started businesses that simply replicate the same issues with a different logo. What Eric and Avi had was more than client perspective. They had decades of operational experience building and scaling businesses. They understood how to create systems, how to attract talent, how to build for durability. But in 2017, as they were laying this foundation, both founders were navigating profound personal challenges, the kind that force you to reckon with what actually matters.
I mean, we thought that it had a lot of potential, but I think you have to also understand where Avi and I were maybe coming from at that time as well. Avi, who had been a very successful serial entrepreneur and private equity firm partner, had had stage 4 lymphoma, and it had this very difficult diagnosis and had to navigate through all of that. And in my case, my wife Jill and I suffered the loss of one of our children, Kara, to leukemia when she was 21 years old after a 4-month battle. And so for me, I was just really emerging from a time in life where I was completely focused on family and philanthropy and service. And so when we had no idea that the opportunity was as large as this has become, what we were excited about was thinking that we would open up an office in Chicago where we had deep ties. I'm from Baltimore originally, Abby's from Chicago, but we both had deep ties to Chicago. And then we both had homes in Jupiter, Florida, and lived about maybe 10 houses apart in the same neighborhood. So we thought we'll have an office in West Palm Beach, we'll have an office in Chicago, and we'll put together a group of maybe 20 or 30 families and share, and it'll be a shared services platform for 20 to 30 families, and then see where it takes us. So we didn't realize how universal these challenges are that families and entrepreneurs and CEO founders face, which is this complexity. And my brother calls it the barnacles on the boat. You just don't realize the friction of the things that keep you from focusing your time where you want to focus it. And for most people that are our clients, it is around family, it is around leading organizations, or if they've exited a business, it's starting a new one and scaling it. There are just so many amazing, talented people that we have as our clients, and they're looking for something to make life easier and better and to give them their time back with a sense of confidence and trust and being able to sleep well at night, knowing that these all important things are being taken care of and how we support them.
I'm so grateful to Eric for sharing his daughter's story. There are links in the show notes to learn more about Kara and the Becker family's journey. When you face that kind of loss, you understand something most business founders don't, that wealth management isn't really about wealth management. It's about giving people back their time and attention for what actually matters: family, purpose, the things you can't get back. That philosophy, that clarity about what they were really building, shaped 2 structural decisions that most firms don't think to make. Decisions that happened before they had a single client, before they'd moved a single dollar onto the platform. From 20 to 30 families to over 4,000 households nationwide, let's talk about what made that scale possible.
So in the early days, as you can imagine, as a startup, the early clients were somehow connected to one of us or someone on our team. I remember when Jack Ablin joined us, and then a whole series of clients came who were connected to him. So in the early days, it all came through relationships and ties. Organizations that we were a part of, like YPO and Tiger 21 and R360, other types of peer-to-peer learning groups where entrepreneurs and CEO founders gather to share some of their challenges. But so I would say that those affiliations and friends and family were very important at the beginning. But then over time, this commitment to building a brand. So when you look at the wealth management space, and we've not done a study on it, it would be funny if someone has tracked this, but most of the firms, the majority of firms probably, are named after the founders. And so at the very beginning, with the first 10 team members, we made two really important decisions that have served us so well, and that I would encourage your listeners to discover and think about as well. The first was, instead of calling the firm Stein Becker or Becker Stein, we decided that we wanted a trademarked name, a name that we could over time build in a way that held meaning. A container that actually had meaning in it and that people over time would recognize and could trust. That was a key, important decision right from the beginning. And the second, which was so powerful and something I recommend to anyone leading an organization, is we spent 3 days before even Avi and I moved our own personal assets onto the platform, before our first dollar of revenue. We spent 3 days just working on our culture. And we developed this culture card that maybe you've seen, and if not, we'll send you one, that has the key attributes in the way we behave, the values that we hold so dear, really important things in how we operate. And that card has served us well in interviews, in interviewing prospective team members. It's been something that prospects and clients have valued in understanding us and what we stand for. It is a thread throughout the organization that's been incredibly powerful. You know, culture is something that we all struggle sometimes to understand. How do you feel it? How do you create it? How do you protect it? How do you grow it? And what I've learned is repetition and that availability of culture. So actually putting it down on paper, taking a crack at that, putting it on a card that we can share with others, it has served us incredibly well. So those two things, I think, led to that next chapter beyond all the clients know us in some way, to where they could start to be attracted to this platform that is something that they needed and that they knew that they needed. And they started to hear about it through word of mouth. They started to see it online or to hear about it in organizations that they were a part of.
Culture and brand are foundational, but they don't execute themselves. Wealth management firms grow through many paths: market appreciation, M&A, service expansion, adding advisors. We've heard about all of these and more on this podcast. What's rare is treating marketing itself as a strategic growth driver from the beginning, not just a support function for other channels. Cresset made that bet early. They brought on someone who understood how to build community, create cultural movements, and translate vision into tangible experience. Someone who'd already built something from scratch. Jessica Malkin had founded and scaled Chicago Ideas into a nationally recognized platform. She knew how to attract attention, build brands, and take calculated risks. Exactly what Cresset needed for their next phase of growth.
I just want to give the origin story of how Jessica became part of Cresset. So we knew each other back when I was a partner at Sterling. We were introduced, the organization that Jessica was leading and was a co-founder of, Chicago Ideas Week, which is like the main ideas festival for the Midwest. 35,000 people coming over a week, 150, 200 speakers on amazing topics. And it was suggested that this is an organization, as someone who's always continuously curious, that I should experience as a guest and then maybe get involved with. So I ended up getting involved and joining Jessica's board. So I had this opportunity to see her in action, leading this organization that she had co-founded and creating an amazing platform for ideas to be exposed to the world, to then be challenged, to give a chance for life where they might grow into important organizations or solutions, or maybe they weren't so great and they would be cast aside. But I loved that platform and having a chance to see Jessica in action. So when Avi and I started Cresset, I told Avi about Jessica, and we asked her to be on our founding advisory board. So Jessica started on the founding advisory board of Cresset, helping to give us advice on many topics, but one of which was building community. When we thought of the different pillars of Cresset, from investments and wealth management to family office services and the way we think about alternatives, which is an important investment category, we wanted this fourth pillar to be around community. So Jessica started advising us and giving us ideas on it, which we started to implement. And then shortly thereafter, Jessica joined us as Chief Marketing Officer and now Chief Growth Officer. So in a sense, the company started in this organic, great way of client founded and all of that. And then Jessica joined us in this amazing organic way, which has been a fantastic journey for all of us.
Well, first of all, I just want to recognize that I've told Eric this now at this point, but years before I got to come work at Cresset, I would tell people that if I ever left what I was doing and didn't go start my own thing, the only person I'd ever want to go work for is Eric. So we're full manifestation of that. And secondly, when it comes to one of the secret ingredients of Cresset's growth success, in my opinion, it is the deep level of curiosity that Eric has. And I lovingly call him Prof E, which is like a Prop G. I love Scott Galloway, but like Eric is our professor. So it's a challenger, it's a connector, it's somebody who's willing to take risk in the face of a lot of people scrutinizing what we were doing, saying this isn't going to work, it's not going to make sense. And I think it's leaning into the friction and being willing to be wrong, which we have been wrong. And we have made mistakes, which we can talk about today. But I think that those are really important conditions that most firms do not have, certainly firms in our space, right? It's like the minute something doesn't go right, you revert back to not spending anything. And that's sort of the famous marketing story overall, right? It's like, or it changes with whoever's in the C-suite. So the growth trajectory in terms of coming over from Ideas Week to Cresset, my journey was kind of working both in that kind of community building way with Chicago Ideas and also in high growth startups. So I had really only known what it looks like to be scrappy when you try to get things done. And that served me well coming into Cresset in the early days, because we really tried to be scrappy and trying to punch above our weight as a brand. And so, listen, I was 7 weeks into my job at Cresset, January of 2020, when the world shut down and COVID happened. We were a baby brand still. And so we were like looking at each other like, well, what are we going to do now? How are we going to market and become a world-class brand? And so one of the first kind of Swiss Army knife items that I pulled out was like, all right, well, let's turn on the dial when it comes to events. Let's find the most spectacular speakers to come join us on our virtual stages and light those up 1 to 2 times a week. People are sitting at home. They're hungry for content. They want to hear from really notable people. And so we were so lucky because at that time we had these established relationships with publishers and publicists, and they were all sitting around unable to work. So we were in this position where we were able to bring in talent like Eric Schmidt or Matthew McConaughey, or Ursula Burns from Xerox, or Barbara
Ray Dalio, right?
Yeah,
Like
Ray
Lindsey Vonn. Yeah.
an incredible litany of amazing minds, and bring those to clients. And at the time, that both served our clients as well as serving our building of a brand, because all of a sudden there was an association effect that happened there. And so that really was our first kind of like driving force, where it created some momentum, created some energy. I think when we were out in the marketplace, people were then like, who is Cresset? Like all of a sudden I'm seeing this on LinkedIn, I'm seeing us elsewhere. And then really another culminating moment was the acquisition of Pagnato Cart. And I think, again, a huge, tribute to Eric is this was a relationship that he cemented and then really saw something in the full package of what Pagnato Cart had to offer. I mean, brilliant model, so clear who they were selling to, great kind of family office story. They had done testing on Google in terms of finding a lot of success, early success on advertising in the paid space. And Eric was curious enough to say, listen, I think we can turn that up, but turn it louder here at Cresset. We are not just in Reston, we're across the whole country. We have more advisors. Like, let's see what we can do here. And so we incrementally turned up the dial, and we kept pivoting and changing. And, we've gotten it to a point where obviously there's an enormous amount of growth that we've had. I'd argue there's an enormous amount of growth left here. We have not fully tested all of the different crevices and opportunities within kind of the space of digital. But the other important indicator here, which you mentioned, is Cresset's not just grown in one way. And the fact that we have a diversified growth strategy in such like a kind of volatile world is really helpful too. So digital is one piece of our pie. We kind of have a third of our growth has been based off of lift outs. So great culture fit teams who we're able to recruit and bring over to Cresset. A third is on M&A and finding those 1 to 2 amazing, acquisitions that we can get that can add to our clients, lives in some sort of a meaningful way, and where we could add benefit to their lives. And then a third of that's organic. And so I think that's also just this magical wheel when you have the ability to have these different growth channels that we can unlock.
You just heard about a series of experiments: virtual speaker events during COVID, the Pagnato Carp acquisition, incrementally scaling digital spend. Each one was a bet. Each one could have failed. What separates firms that innovate successfully from those that don't isn't avoiding failure. It's about how quickly you recognize when something isn't working, how honestly you assess why, and whether you have the courage to make the next call. I always ask guests about their failures because that's where you see the real leadership. Anyone can talk about what worked. The question is, what do you do when you've invested time, money, and credibility into something that's clearly not delivering? Here's what that looked like at Cresset.
Okay, I'll share it. Eric was an amazing partner on this failure journey with me. So he'll know exactly what I'm talking about when I talk about it. So several years ago, when we were just starting to kind of scale up the digital program, one of the things that Eric was challenging me to think about is like, how are we going to build this for scale? How are we going to think about constructing this? Because what was really an experiment at Pagnato Carp needed to now serve the whole country and serve a larger brand. And so I met with a good friend of mine who's a high up at Google and said to him, what would you do? Here's what I need to do. Here's the challenge. And he gave me advice, which was to bring on an outside partner to kind of help us architect a platform that would help us kind of build our digital marketing framework off of, and then ultimately have them construct it, have them walk away, bring in somebody in-house who could help us kind of administer and run it, and that this would help give us the scale that we needed. And so taking the sage advice from somebody who I trust and who is, a higher up at Google seemed like a good idea. We met with a few different firms to help us, went through a really rigorous process. So it was not for lack of rigor, but it was just as anything happens, there was just conditions at play that were outside of our control, and that we brought on a firm. They began construction on this, but about 6 weeks into the relationship, if not earlier, the guy who was our lead person on this left. And subsequently, the firm started to see big exits left and right. And we were freaked out because in the process of plugging in this new platform, we were going to have a quiet period where essentially the digital leads were going to dry up, but we weren't supposed to be concerned. But of course, when you're spending what you're spending on digital and you're a scrappy, agile business, once you hit a certain point, you say, okay, now I'm getting nervous. And so we were tracking and managing this all along the way, but at some point we realized this isn't working and we aren't going to get the results that we were hoping for. And so I think what was an important moment of truth for me was kind of realizing that like I could continue this on and like stay true to my vision of like, this is exactly how it has to run, or I could pull the plug out, regroup, go back to what we were doing before, and still trudge down the pathway of bringing on an amazing expert to help lead the charge. And so it was a conversation that Eric and I had where I said, like, I'm so sorry I don't know how I would rerun this playbook because I felt like we were so thorough and paranoid in this process, but this isn't working. And I don't think we can afford to give this any more time. And so Eric held my hand on it. He's like, listen, like we were thorough and we did a good job on diligence. So like, I think the important thing is to make the call. And so we made the call, we reverted back. And the beautiful thing about all this is that through this process, it took us a little bit off track for a period of time. But the beauty is that we did indeed bring on somebody extraordinary who helps us lead this charge now. And she has done an amazing job in partnership with the broader team. And so we got to where we were going. But again, it's not without that ability to do trial and error and knowing when to call it.
2 pieces of advice first, and that is constructive tension, and then what I like to call just the right amount. So we had constructive tension in that situation that Jessica described, where we had debated it, we really challenged the leadership team, and we all were in. Once we made this commitment, we were all in together. And then when it was time to pivot from that, we were all in on the pivot together, and we all learned together. So the first is, make sure in your decisioning as you're growing your business that you create an environment for constructive tension, and also this idea of just the right amount. If you have too much tension where people are over challenging each other, it creates an environment then that's not going to create growth. But you have to have this constructive tension, that balance of being sufficiently supportive and sufficiently challenging to get to better decisions and answers. And then when something doesn't work out, we all feel like we were heard and we were all part of that decision. So that's important. And then also in this concept of just the right amount, a couple of mistakes that we made. One, very early on, because Avi and I came from outside the industry and we thought that there was so much opportunity for improvement, we started bringing other people in from outside the industry, thinking, wow, if this person was really good at technology, but they came from healthcare, then, why couldn't they do well with this? And we overdid it. We didn't have just the right amount of outside that we brought in. It was too much, and we didn't have enough of the innate understanding, and so we made some mistakes from that. I would call that a little bit of arrogance, quite honestly, like we're coming from the outside and we know so much. As clients, we only knew so much, and we didn't know all the things that we didn't know. The second really hard lesson and mistake that we made is because we were aspiring to be a 100-year business, early on, we sometimes invested in tools and software thinking so far ahead, but when we and the tool or the software were not ready for that moment. So I can give an example that I will keep unnamed, but there's a tool that many great firms use today, including us, that we went with 6 or 7 years ago and had to suffer through them figuring out all the things they needed to figure out to get to where they are today. And I would have much rather gone with a tool that had some scalability, but could have helped us in a powerful way right then and there on our operating platform. So I think it's like thinking ahead and thinking about tools that are scalable, but also that you can use right then and there, knowing full well that 3 years from now or 4 years from now, you may need to evolve and move into something else that will have really proven itself by then. So those were 2 things that were painful lessons along the way, but I take from them, always have constructive tension as being something that's celebrated in your decisioning engine. And then also this idea of just the right amount, just the right of outside perspective, just the right amount of industry knowledge and experience, balancing these things to make for better choices and decisions.
So that's the foundation: client founded, culture first, willing to experiment and pivot. But foundation alone doesn't explain $65 billion in 8 years. After the break, we'll get into the mechanics, the diversified growth strategy that compounds in ways single channel approaches can't, the pre-liquidity program that is inclusive beyond family office sized minimums, and the real-time pivot happening right now as AI reshapes how prospects find advisors. Stay with us. Are you looking to supercharge the growth journey at your business? Ficom is ready to make it happen by serving as your embedded growth partner. Let us put our unmatched industry and growth marketing expertise to work for your business. Our strategy-first, multidisciplinary approach ensures your business goals stay at the forefront, so you're always aligning all your marketing activity around the growth you want to achieve. Visit us at ficompartners.com to find out more. All right, welcome back. Now let's talk about the Cresset growth engine. One of the structural advantages Cresset built is diversification. A third of their growth comes from M&A, a third from advisor lift-outs, and a third organic. When one channel slows, the others can compensate. When all three are firing, growth compounds. What makes this work isn't just having multiple channels, it's how they reinforce each other. The brand you build through digital attracts lift-out teams. The family office capabilities you add through M&A make organic leads more valuable. It's a flywheel, not a portfolio of separate strategies. I wanted to understand how they think about balancing these channels as the market shifts, and whether their focus on the CEO founder archetype is creating compounding advantages they didn't initially anticipate.
I actually think it's been, in the last several years, pretty consistent, which is great. On the organic side, as you start to dig into it, one of the interesting things has been the focus that we've had on this archetype of the CEO founder and how that has brought down the average age of a client to a younger profile than I think a lot of the firms. And since we have a chance to see many firms when they enter the marketplace, and then when you look at the assets, if we're at 65 billion plus today, our clients have probably a multiple of that, but certainly minimally 1 to 2 times that amount outside of Cresset through still owning a family business or owning a concentrated stock position in the company they're leading, whatever it might be. So in those numbers that Jessica was giving, you've got digital marketing, super exciting. That's amazing. You also have these younger clients that are having additional liquidity events, either a primary liquidity event or they kept a rollover piece in their exit, and now that second piece is going to exit. That has been a very exciting part of it, in addition to all the traditional things that everyone does, which is, leveraging relationships and events and all the things you do person to person to build business and centers of influence and all the traditional things, which we do those things too. But what's really exciting is by being so focused on who we want to serve, that has ended up being a blessing to the company as well in bringing us additional assets more quickly and in an organic way.
Archetype selection isn't just marketing jargon. It's a strategic filter that shapes everything. Who you hire, what services you build, how you communicate, where you invest. CEO founders are an archetype with built-in compounding dynamics. They have liquidity events. They refer other founders. They value the entrepreneurial culture Cresset has built because they recognize it. And critically, they're younger than the typical wealth management client, which means decades of relationship runway. But knowing who you serve and actually reaching them are different challenges. I wanted to understand the mechanics. How do you translate archetype clarity into campaigns that actually resonate?
So listen, we have the benefit on our team of also having client experience attached to what we do, which I love, because it gives us a really close fingerprint, kind of pulse and touch on what clients are thinking and feeling, alongside the hundreds of conversations that Eric has annually with different founders. And so I would say our experience in developing campaigns is highly collaborative at the onset, which is going and getting as much direct feedback from our clients and from the conversations that we're having and from the surveys that we're doing, in order to then go develop out content. So then we think about it as a multi-channel play. So that's everything from what events could we be doing that we'd light up in different markets, either virtual or in person. How is this going to influence our ad copy? How is that going to influence the landing page that we've designed and developed that is bringing people to that page to interact and interface? And then what are we doing when it comes to a nurture campaign or a newsletter that we want to attach to that? So I think that we're pretty crisp on once we decide to do a campaign, but we're also not getting too fractured. To your point, we know who we're speaking to. So we want to create really clear channels. We don't want to confuse the marketplace. There's a big difference between a full-blown campaign and a one-off piece. where
Right.
we think we can go develop, like, whether there's something happening in the headlines where we want to turn around and leverage what's happening on search. That's very different than something that's like a robust, like, campaign that we want to do and create.
Let's talk about ownership structure, because this is where a lot of firms say they want one thing, but end up building something entirely different. Most founders talk about wanting employees to think like owners, but thinking like an owner without actually being an owner is just corporate speak. It doesn't create the accountability or long-term commitment that true ownership does. Cresset's structured ownership is 60% owned by employees, 30% clients, and 10% from minority investor Constellation Wealth Capital. That's not just a generous equity compensation plan. That's a fundamental bet on who builds the business and who benefits from its success. It also solves a problem most founder-led firms face, which is succession. How do you build something that outlasts you when all the equity sits with the founding partners?
Because Abby and I started Cresset a little bit later in our careers, although Abby probably still would say that we have, multiple careers ahead of us. But because we started this later in our careers, part of the idea was to try something that we had never really done before as entrepreneurs and as investors. And that was to take this idea of shared success and the accountability that we were looking for from our team members, especially to do something hard, which is starting something from scratch and building it, is really hard. And to get that extra commitment and accountability, and to see if we could create a platform that could have succession and could be multi-generational and last potentially 100 years or more, we wanted broad ownership by the team. And we started this right from the beginning, doing equity grants or profit interest grants right from the get-go. Completely every single person who joined what became an equity owner. And now you fast forward to today, it's 60% employees, it's 30% clients and individuals that really wanted to see this come into being and wanted to support it the way Avi and I had originally. And then 10% is this wonderful investor, Constellation Wealth Capital, that we brought on for a couple of reasons, but one of which that was very important is that many of our employee owners have never had ownership like this before, and having a third-party investor write a 9-figure check and set a value at the market really gave everyone, when they visit Carta and look at their shares, a very clear idea of how much value that they have. So that was a wonderful thing to bring in a great longer term specialist investor just focused on our space with cultural compatibility, but to also set a mark for our team to understand the value of what everyone has. So that idea has been very powerful. And I showed at the beginning the culture card and talked about culture and brand at the very beginning. I think that power of broad-based ownership put a lot of energy or an accelerator or afterburner onto this idea in our culture around it, thinking like an owner and extreme accountability for the commitments that we make. And things that, like Jessica just spoke about, like having these feedback loops and deeply listening to clients and then always looking to try and improve. It's an extension of being a fiduciary. If you really, really care about your clients and are acting as a fiduciary, then you would also want to always be improving, increasing the value add that we're providing, and always getting better, which makes for a sustainable long-term organization. But that idea of broad-based ownership, very powerful.
So still today, every employee at Cresset is some type of equity owner?
Everyone is an equity owner. And when we've done these culturally compatible acquisitions or combinations along the way, many of those firms were facing succession challenges and had team members that did not have equity. And so if you became part of Cresset, we equitized the entire team. So everyone who's joined, one employee at a time, everyone who's joined as part of coming over with a lift out team, their full teams are equitized. And then on the acquisition and combination side, we have always made sure then that everyone has equity. It becomes an exciting thing as individuals and teams join Cresset.
Equity ownership matters, but it's not the only thing that matters when an advisor is deciding whether to leave a wirehouse. The economics have to work. The operational infrastructure has to be there. The service offering has to match or exceed what they can access at their current firm. And increasingly, advisors want the independence of entrepreneurship without sacrificing the resources of a larger platform. That's a difficult balance to strike. Most firms excel at one or the other, scrappy independence or institutional resources, but rarely both. Cresset's lift-out success suggests they've figured out something about this balance. Let's hear what advisors are actually telling them.
I'll tell you what we're hearing, and then Eric, I'm sure will have like additional perspective here too, having been on the other side of a lot of these conversations. I think what we're hearing a lot of is that there's a few pain points and realizations. One is, and it's an important trend, for the first time ever, you'll have more assets coming over to the independents than you will to wirehouses. So I do think there's like, at the macro level, a huge shift that you're seeing. And I think advisors are recognizing that. Two is, I think that there's a real desire to be able to fully serve the clients and be able to provide and offer up all the family office services that a house like Cresset has, that the houses that they're currently in cannot offer or are very limited, or it's only for a subset of the client base. Three is a desire to be an owner. A lot of the advisors who come to us say, I'm an entrepreneur. I want to have skin in the game. I want to continue to build this business, and I want to do so in a way that feels good, and being a fiduciary feels really good, alongside being able to offer these up and being able to be an owner. And I think that is a huge, huge piece of the conversations that we're having. And I think in terms of our own story, and we've obviously been doing lift outs from the very early days of Cresset. One of the things that I just call out as like huge milestone for Cresset was a year and a half ago. We brought Susie Cranston alongside many other great executives into the firm. And Susie's time at First Republic as COO, she led a lot of the incredibly successful work around bringing on high-powered, unbelievable teams. And so we get the luxury and the pleasure of having her had that playbook at First Republic and a pristine reputation and making sure that she can create and manifest a great operational environment that makes life frictionless for not only our clients, but for our advisors. And so I think that gives us a huge amount of goodwill in the marketplace.
Yeah, what I would add to that, the first one is the breadth of our services and the very real and measurable way that we support that. So the team that's doing family office services and family office administration, a lot of advisors that are considering coming to Cresset, they love the idea of being able to offer these additional services to primarily what are wealth management clients that need these services. It's a huge pain point. We talk to so many families, and having access to great family office administration, even from simple things like bill paying, all the way to the most complex solutions you can imagine for a large, billion-dollar plus family. Advisors are looking to have more on the menu and have it be real. The issue, as having been a client myself of a wirehouse for many years, all the years, 25 years I was a client, I think I saw a wealth strategist, which would be an estate tax attorney that is on their team once, maybe in 25 years. Ask that person, what are you responsible for? I'm responsible for the West Coast. Oh, so like the entire West Coast, one person? So many firms, unfortunately, overuse this word family office in so many ways that honestly bother me. One is not actually having the services. That really bothered me as a client. But it bothers me when people use the word family office in lieu of what is really an investment office. So one of the things I love about Cresset is I feel like we've really put family back into family office in an authentic and real way. But advisors love having more on the menu, whether that is the deep and broad services of family office administration and family office services itself. And then I think the second piece is we have learned that scale matters. It was part of our hypothesis that scale mattered, that we had to build a brand and a boutique experience, and we had to be super disciplined in maintaining that. But could we use our scale as fiduciaries to benefit our clients? Meaning that if at scale we're able to negotiate a lower cost from an investment manager, we pass that right through to our client. And that break, that discount, that lower cost, that's real alpha. That goes right into their investment returns, whether that's public portfolios, private portfolios, in some cases, negotiating a piece of the GP in a private fund or getting benefit from being an early commitment or a larger commitment to that fund. All those benefit to our clients' returns. And with a high degree of certainty, essentially absolute certainty, that discount or break or piece of GP will add value. And I think that advisors love that, and they feel like they're getting part of something that's different than the old-fashioned financial services firms that looked at everything as a profit center. If they were able to get something different from a manager, there were many different techniques and ways in which that seemed to inure mostly, if not all, for the benefit of the firm itself rather than for the clients. And advisors, they love the purity of that, and they love the real tangible benefits of it as well.
Here's a tension most firms struggle with. How much growth responsibility sits with individual advisors versus the firm? Put too much on advisors and you're back to the wirehouse model. Everyone's a rainmaker or they're out. Centralize it too much and advisors feel like order takers rather than entrepreneurs. Cresset has built a national platform with significant marketing infrastructure, but they've also attracted advisors who value autonomy and want to build their own practices. So how does that actually work? What does the firm provide and what do advisors own?
I think in terms of our commitment and what we're doing to create the right environment for that, one is obviously digital marketing. And so even in the early days of teams who've joined Cresset, what we found is like within 2 to 3 weeks of joining, we've been able to serve up incredible leads. You know, like a CEO who just IPO'd from a well-known business who's looking for somebody. And we're able to serve that up in the early days of somebody's Cresset story. On top of that, we're producing about 100 programs a year, both virtual and in person across the country, working in partnership with teams to produce programs that can bring in both prospects and clients to ensure that we're getting some of that growth that we're talking about, as well as, you know, individualized campaigns. So for those advisors who want to fully leverage some of the marketing engine components, you know, setting them up so that they can digitally send things out and be managing some of that content themselves and leveraging the Cresset brand. I think there's an emphasis on flexibility, and each team can individually develop their teams in the way that they see fit. They can leverage and utilize the marketing engine as they see fit. And it really is that like we have a very masterful group of advisors. They know how to do great work. We merely can be additive to that process and that approach.
There's nothing more gratifying than getting referrals from clients, nothing more authentic than someone telling their friend that they're a client and that it's great, and this can be a great solution. But this industry has, I think, there's a hard truth about how sales and marketing has traditionally been done in financial services and specifically wealth management. And I can give the perspective from my own client experience over decades of being an entrepreneur. One, being in my late 20s and being turned down by one of the great famous firms still to this day as not meeting their minimum. Well, then as my career advanced and my assets grew, I didn't have much of a appetite or interest in working with them, having had the experience of where were they when I was 28 years old and actually really could have used their help. And I always made sure that their investment bankers, when I ever used them for a particular purpose, that they, one, knew to never have the wealth team call me ever and why I felt that way. So that's an issue, is that you get these calls as an entrepreneur and for funny reason, the call's always within 12 months of your liquidity event. I don't know how, but the investment bankers somehow let it be known. And within 12 months, 6 months, 60 days of your liquidity event, you're getting all these emails inbound and messages left for you on voicemail that it's Joe calling from XYZ firm who wants to chat with you about it. Well, like, where were they when it really mattered? When you're building something and you never heard from anybody, like crickets. That's one. The second thing is this idea that sales and marketing in wealth management is that I'm going to meet someone and get to know them and take them out to dinner 17 times and then invite them to go to the Super Bowl. And somehow over a year, they're going to like me better than the person that's serving them. That's just not a great way to spend your time. And so what we've really done, I think, is come up with a methodology with all these wonderful things that Jessica was talking about that also gives and honors our advisors for the incredible talented people that they are, where they are thought leaders and they are experts in what they do. And that, you're hiring McKinsey, you're hiring thought leaders and experts to help your family. It's not like you're going to wait to become their best friend in order to make a decision that this is something you need to do. So I think the whole orientation of it, from the brand and the culture and the digital marketing and the events and the content that is generated, which, by the way, is all authentic. Every piece of content, it's all about take-home value. We're not putting it out there just to have content out there to get viewers or people engaged in a not authentic way. It's got to be something where people see themselves in it, that we're helping to solve a problem, a real problem that they face. And that has really been something that has helped our advisors to grow as well.
Most firms set minimums and stick to them. It's rational. You can only serve so many clients profitably, so you filter by AUM. But that logic assumes static wealth. It misses the entrepreneurs in their late 20s and early 30s who are building something significant but haven't had a liquidity event yet. The doctors finishing residency, the executives climbing toward the C-suite. These are people on a trajectory, and if you wait until they meet your minimum, you're competing with every other firm who also just noticed them. But if you're there early, before the liquidity event, before the wealth accumulation, you earn something money can't buy later: trust built during the journey. We talked about this approach in our episode with Gerber Kawasaki, how cultivating next generation clients creates loyalty that's impossible to replicate later. Eric's rejection story at age 28 sparked something that became Cresset Catalyst. Here's how it happened.
Because it was so painful, quite honestly, to be 28 and to feel like you're, a very little person, or very small. I think that I told that story so often that at the time, the gentleman who had been my chief of staff, Oliver Rose, came to Avi and me one day and said, I have this idea. The idea is Eric should stop telling that story. We should start something called Cresset Catalyst. He came up with the name, where we will serve first-time founders, like intentionally. So this thing that you say was so painful in your career and where everybody seems to miss, let's actually come up with something that's designed around that issue and the services that they need and what they can afford to pay, and let's do it. And we actually thought, this is something we will subsidize. This will be something we'll lose money on. It'll be part of our giving back to the entrepreneurial ecosystem. Well, the amazing thing is that there's 120 plus people in that cohort. They've been highly successful. We've had multiple liquidity events. I think the average liquidity event in terms of the assets that end up on the platform are 20, 25 million. It's been super exciting and incredibly gratifying to actually sincerely want to give back, but now seeing those young, high potential leaders grow into real clients. And so it's an amazing thing where sometimes doing the right thing is you end up getting amazing benefits by just doing the right thing.
The funny part, Meg, just to add on to what Eric is saying, this came through. So we were getting a bunch of digital leads in that we weren't able to serve because they were under our minimum at the time. And so what Oliver identified as the trend line here was we were saying goodbye to clients who down the road could very well be great clients. And so it was essentially being able to take that group that we had been getting and saying goodbye to because we were not successful in figuring out what to do with them and developing and constructing a program around it. So again, it gets back to curiosity is king, right? Create an environment that allows for curiosity, questioning conventional thinking and manifesting new ideas. And for somebody who was as close to Eric as Oliver, so therefore was really close to the digital program in the early days, that spawned into what is now our pre-liquidity program called Catalyst.
And it sounds like you're a part of their success. I mean, Eric, you're talking about how every piece of content that you create is with the intention of value, offering value and helping CEO founders, the archetype that you serve so well, be better, live better lives, learn, and also have the opportunity to engage within your community. So I'd have to imagine that feels highly satisfying when you're able to see these successful exits come out of that Catalyst program.
It is. I love mentorship, and Jessica mentioned that in such a nice way early on in our interview here. And so really, this is something that before Cresset, I used to volunteer in incubators and try and help young entrepreneurs. I feel like it's all of our responsibility in any career to try and help people that are coming along behind in that journey. So it's been amazing to actually have that opportunity to combine a passion of caring and of mentorship and helping others with the practicalities of building a scalable business and one that's sustainable and profitable over time. To be able to combine those in a way that's working is amazing and really, really fun. And our advisors love it too, because we're the same way that we have summer internships and when we're doing on-campus recruiting to create a pipeline of talent for the future that we can grow the amazing workforce that we'll need 10 years from now. Similarly, we're incubating and helping these high potential younger clients that will become larger clients in the future.
Cresset Catalyst is a perfect example of what happens when you pay attention to the data right in front of you. Digital leads coming in under your minimum aren't noise, they're signal. But here's the challenge. The channels themselves are shifting faster than most firms can adapt. The digital strategies that worked 2 years ago are already changing, and the pace of that change is accelerating. You heard at the top of the episode that ChatGPT brought Cresset a $500 million prospect. That wasn't a one-off. It was an early indicator of something much bigger happening. I wanted to understand how Jessica thinks about growth strategy when the landscape is moving this fast. How do you set goals? How do you know where to invest? And what do you do when a channel you've spent years building suddenly drops 30% in performance?
I'll take this in a few different directions. So I'll talk at a high level about like kind of how do you think about planning and then putting together the plan. And then I'll also talk about I don't know if you already have this on the docket, but I want to talk about AI as well, since it's a huge piece of what we're focused on when I think about like moonshots and kind of the growth opportunity. But I mean, under kind of the growth role that I'm in, there's a huge percentage of the overall growth in the business that's tethered and attached to this engine. And so first and foremost, I think is determining the business goals. First and foremost is figuring out like where do we want to take things. From there, it's constructing what kind of pipeline am I going to need to have? What kinds of strategies are we going to need to deploy in order to bring in the right types of clients or the right number of lift outs when it comes to that piece. So I think there isn't necessarily, I wouldn't say like a prescription around the strategy. I think a lot of it is the discussions that I'm having internally, looking at the market conditions of what we think is going to be happening. So for instance, on digital, if you're looking at a year where you're projecting that like there's going to be either an increase in M&A activity or a decrease in M&A activity, that has a direct correlative to the work that we're doing on digital. And it presents an opportunity and it presents a challenge in terms of what I'm going to bring in that calendar year. Or it allows me to look at different industries. What are the different strategies that we're deploying among the advisors to be able to showcase our, expertise in helping those types of founders? And so I think these are all seasonal, and it really is dependent on what market activity we're perceiving is in front of us and how are we going to deploy different strategies and be really ready to pivot too, because things are changing so rapidly. I mean, we've got a lot of volatility right now. So from one week to the next, when it comes to AI, which is where I see like a huge shift happening in particular on digital, is, this past quarter, so for quarter two, we saw a 30% decrease in the number of click-throughs on ads on Google. Google's behind the eight ball. A lot of our strategy was investment in Google. And over time, it was shedding some of those dollars and reassigning those to new channels. And when I was on stage and I was talking about the one prospect that we'd gotten in on ChatGPT, well, guess what? Almost 50% of our leads this past quarter came in from an AI engine. So
Wow.
it just shows you this is moving quickly. And so a lot of the work that I'm now shifting and pivoting to, and the team is doing a great job of, is instead of looking at search engine optimization, we're looking at geo. So we're looking at how generative search needs to be gamified and tooled with in order to benefit what we're doing. And that is a completely different approach than what we've been doing in terms of like the content still plays, right? Like more content is better for AI. But now it's looking at like 200 different sites that where we show up and making sure that we are showing up in the way that is going to be good for the tools that are scraping the internet and serving things up into an AI engine. So, the exciting thing from where we're sitting is it is constantly shifting and changing. And I'd say you always want to have clear goals. Like I think clear growth goals are important, which is I need to hit these target numbers in order for me to have a barometer on success. I need to have this lifetime value, CAC ratio. So cost to acquire, like I pay attention to my LTV CAC ratio to say, is this still a very profitable program? But from there, it's almost like you need to be able to almost like get on the horse and ride and figure out how to drive the growth. And that's not always a straight line.
And what you were asking about the importance of having someone like Jessica in this role, or what does it mean to have a chief growth officer? There's so many layers to that. The first of which is by having that, it shows our commitment to growth and to the right kind of growth. So growth doesn't matter if it's not profitable, that's certainly one, or if it's going to dilute the brand or dilute the service levels, the boutique experience. Growth matters really in two ways. One is, does it help fuel what was a hypothesis that we've absolutely proven now, and that is that scale can inure to the benefit of the clients in so many ways. By having the resources to be able to invest in cybersecurity, AI. We just recently brought on a PhD in AI. We just recently struck an enterprise level relationship with one of the top AI companies. So we're using scale to benefit the clients, and having the growth to power that scale is an important part of the formula. It's also a mindset. If you're going to have CEO founders and entrepreneurs as a primary archetype, and by the way, here's the secret, even a family where the CEO founder or the entrepreneur were from a generation ago or 2 generations ago, the wealth still came from a connection to a CEO founder and entrepreneur. And so families, even multi-generational families, value that connection. And guess what? CEO founders, entrepreneurs, leaders of organizations, all need and want to see growth in their organization. And for our people that we have, in order to grow and stay with Cresset for the long term, like we're thinking in terms of 100 years as a company, they need opportunity in order to advance if we want to retain them over the long term. So for all those reasons, investing in and having someone responsible and thinking about that every day is a critical part of our formula for the future.
That's the kind of pivot most firms can't make. 50% of your leads shifting channels in a single quarter, and you're already adjusting strategy, not panicking, not retreating, but leaning in. It's easy to hear this and think it's about being good at digital marketing, but it's really about something else, having the infrastructure, the talent, and the risk tolerance to move fast when the ground shifts. That capability doesn't come from tactics. It comes from how you've built the foundation. We've covered a lot of ground, the growth strategies, the ownership structure, the pivots and failures. But I wanted to close by asking Eric about what this has all been for, because building a $65 billion firm in 8 years is a story. But building something meant to last 100 years, that's a different story entirely.
The first human part of it is the fact that Avi and I both had been humbled by life events. And by the way, our families, no one is immune to these kinds of life challenges. Everyone faces challenges in one form or another, or inevitably. And so the idea that later in life that we could start anew and then share that in a really meaningful way with this broad ownership that we have of our teammates here. I tell my wife, Jill, this is the best group of people I've ever worked with. And by the way, this has turned out to be the best industry that I ever worked in. I was in many other businesses over the years, probably 100 companies in my career that I was either a board member of, or I was on the management team, or I was an investor in. This is the best group of people in the best company in the best industry I've ever been in. And something that all of your audience and listeners can be excited about is the amazing and wonderful tailwinds and characteristics of this. And by the way, the fact that this podcast exists, I've watched other episodes. This is an industry that's competitive but collegial, where we've shared today and other firms share as well. And so the combination of these great tailwinds and then the culture and character of the industry that the best firms really live to serve is awesome. So for all those things, I think of the personal story of being really, on your ass, quite honestly, and really in a tough spot, and then having a chance to rebuild a life, and then to also have a chance to share that with this amazing group of people now that are all owners with us in this organization that has been designed from the ground up to be sustainable over a long period of time, where it's really my hope that some of our summer interns that we had this summer, our leadership in this firm decades from now, would be an amazing thing, serving the next generation and subsequent generation of our clients and future clients. So that's really, it's what's wonderful about it is the combination of the human side and the things that we love about the best people in our lives, combined with a very practical, highly resourced platform to improve the lives of our clients in a meaningful and measurable way.
Eric just said something that stayed with me. This is the best group of people in the best company in the best industry I've ever been in. Coming from someone who's been a board member or investor in over 100 companies, that means something. But here's what makes that statement powerful. It's not despite the personal tragedy he and Avi experienced, it's because of it. They understand what wealth management is actually for. Not accumulation, not performance metrics, time, attention, the ability to focus on what matters while someone you trust handles the complexity. That clarity shaped everything. The decision to spend 3 days on culture before moving $1, the choice of a trademark name instead of founder names, the broad-based ownership, the focus on CEO founders who value entrepreneurial culture because they recognize it. And yes, the numbers are remarkable. $65 billion in 8 years, 4.5 from digital since 2020, 50% of leads now from AI engines. But those numbers are outputs, not inputs. They're what happens when you build the foundation right. The question for the rest of us isn't whether we can replicate Cresset's exact model. It's whether we're willing to make the foundational decisions that make any significant growth possible. Pick a clear archetype and mean it. Measure what matters. Be willing to pivot when the data tells you to. Build for the clients you want 5 years from now, not just the ones you have today. That's how you build something that lasts. I hope you liked this episode as much as I did. As always, I invite you to connect and engage with me on LinkedIn and share with me what resonated. What were your key takeaways? Or I invite you to leave a review for Growth Leaders of Wealth Management, whether on Apple Podcasts, Spotify, or YouTube, because ratings and reviews are always appreciated. At FICOM Partners, we're on a mission to help advisory firms achieve the growth they're capable of. We serve as your outsourced CMO and marketing department, driving marketing-enabled growth through strategy, execution, and advisor coaching. For more valuable resources, I invite you to visit ficompartners.com/insights. Please subscribe to the podcast and on YouTube so you can continue learning from other inspiring growth journeys. I'd like to thank today's guests, our producers at Podpony, production assistant Molly Spina, and my lovely executive assistant, Kristen George. This is Meg Carpenter, CEO and co-founder of FICOM Partners, and your host of Growth Leaders of Wealth Management.